Now, Scotland is to get its very own public investment bank, with the government ploughing £2 billion into it over the next decade. The Economy Secretary, Keith Brown, has predicted it will push innovation and enterprise and potentially transform the country's struggling economy. But critics have accused the government of timidity, claiming the bank will only have the capacity to tinker at the edges. So what difference can it make? Do we need more state intervention, or should we be looking to venture capitalists to fuel Scotland's economic acceleration? I'm joined now by Professor Ronald MacDonald of the Adam Smith Business School in the University of Glasgow, and by Robin McAlpine, who's Director of Common Weal. Well, Robin McAlpine, first of all, what is this supposed to do that isn't being done already?
Well, what we've got in Britain at the moment is we have a finance sector which is very good at giving you loans if you've got something which returns a fast return. So we've got an awful lot of lending in Britain which is very good if you're speculating on finance, on housing, various things like that which give you a fast return. What it's not so good at is backing businesses which take longer to grow, which need longer term support and which need different terms. So what we've got is a gap in our lending market. This is recognised all over Europe. Lots of countries have national investment banks. These banks are driven not by short-term profit, but by mission, by the aim. And so their aim is to support companies to grow not over the short term, but over the long term. And that's part of our investment environment that we are missing in Scotland. And that's what this bank should be able to help do.
Well, an obvious point to make, Ronald MacDonald, is that organisations like Scottish Enterprise and the Scottish Development Agency before it have been doing this for 30-odd years, haven't they?
Yes, indeed. I think that is my concern about this initiative. I mean, obviously I welcome the government thinking about how we address issues of our low growth and low productivity, but it's not clear to me that this is the answer, because there are two elements in this bank. One is to fund government's mission, and the other is to try to help small and medium enterprises. Well, we know what government's mission is, and it has a lot of powers already to address its mission. I mean, for example, we know that the country's infrastructure is an important driver of growth. We know that we've got a national crisis, for example, in our roads. They could be doing something about that with the current powers they have. In terms of the small and medium enterprises, which is the other element which Robin McAlpine touched on there, the amount that they're putting into that is quite small. I mean, if you look at capital needed to raise, the kind of capital that life sciences need, for example, to expand and grow, it's much greater than what they're proposing here. So I don't really see it making a great difference. And the point that you made, that there are already other quangos out there which are already doing some of this. I mean, we've got
and also there may be world-famous Scottish companies that have come out of all this aid over the past 30-odd years, but frankly, I'm struggling to think of any.
Well, absolutely. And I think there's a record of us investing perhaps in the wrong things. For example, with the computer revolution, we attracted foreign direct investment into the hardware when in fact we should have been investing in the higher fruit, if you like, the software end of the market, which is where all the big productivity gains
Well, actually,
came.
Just let's take that point, Robin, of computing is an obvious example of the problems of governments trying to guess the market. I mean, IBM failed to realise the true significance of the revolution in personal computing and lost out to Microsoft, which in turn was not that brilliant at recognising the mobile computing revolution and lost out to companies like Apple and Google. What chance a bunch of government civil servants?
Well, you see, this is the point. Everyone seems to be completely misunderstanding this. This is not a Scottish enterprise ring-fenced fund that bureaucrats are sitting and giving a guess as to what is going to work or not work. This is a bank. I mean, if you were to go to Germany and you were to say, well, why would you have a national investment bank investing and sustaining your incredibly effective productive industry, the people who won, the people who did well? They've had a bank for decades and decades. Now, this bank is not a fund. It's not a small scale, here's a wee bit of cash, here's a wee bit of targeted whatever. It's looking at whenever someone is coming forward with a proposal, with a business plan, and it is saying, does this look like it's a solid bet? Now, one of the things that I want to see, and if you think that Scottish Enterprise has got people all over Scotland jumping up and down thinking, Scottish Enterprise, I'm going to start a business and take a risk, you're kidding yourselves on. That's not where we are. We need to create an investment infrastructure in Scotland which is driving demand. It's not a question of we've got all these companies just sitting there, which ones are we going to pick? between. The problem in Scotland is we don't have enough of these companies starting. We don't have enough of the people taking a chance to start these companies because it is a hostile investment environment for a start-up business. So one of the key things that we should be seeing a National Investment Bank doing is creating an attitude which, if you've got a good idea, it is actually possible to go out and get finance on terms which help you grow and not be scrambling around and filling in excessively long forms to get tuppence halfpenny from a development agency. It's that kind of thinking which has been holding the Scottish economy back.
But that doesn't quite answer the point of why what is in effect a government agency would be any good at deciding which companies or potential companies should get finance and which shouldn't. I mean, for example, it's well known in financial theory that as soon as you have an easy deal given by a bank, the first people who queue up are the people with daft ideas that should never be given a penny.
But it's not. This is a bank. This is not a government agency. And this is one of the things which I think, again, people are slightly mistaking here. We argued from our first time we wrote a paper on this subject, this has got to be a bank. It's got to be run by people with financial sector expertise, and it's got to be lending on the basis of a business case. This is not a bunch of people who've never seen the inside of the finance industry before throwing money at crackpot schemes. This is a bank assessing carefully. What's different is the mission. So the people in the banks that we have are told you will lend according to how fast you can get the money back. So if you've got two options, one takes 5 years and one takes 3 years, you pick 3 years.
Ronald MacDonald, there is a perception, a wide perception of what Robin was talking about, the gap. That there are certain types of project. Once you're up and running, you can get bank finance in this country. It's at the stage that Robin McAlpine is talking to where there is a gap, and lots of other countries seem to have these state banks which fill that.
Yes, absolutely. But I think the point I would make on that is, and Robin McAlpine mentioned we need to change the culture of how we invest, and I think that is absolutely right. But if you look at other countries, again, Germany was mentioned there, it's not just that they have one of these national banks. They have a very different, what I would call, and social scientists would call, social capital, the way they organize business, the way they organize society. And the commercial banks there have a very different attitude to risk-taking. And that is why that you see much more lending in Germany from commercial banks to the private sector. And it's really this issue we've got to address. There's similar issues, for example, in Japan. Why that's been so successful has been the way they've organized the existing financial system. So although
though, in places like Japan or Korea, is the other obvious example, there's an argument that state direction and state financing worked for a certain stage of economic development, basically while they were catching up with the West. But when it comes to the sort of 20th, 21st century types of things, it's not so good. I mean, Japan, for example, is not that big in the new technologies that companies like the Silicon Valley companies are into.
Well, fair enough. But I think the comparator I mentioned that is critically important, I think, is Germany, because what this bank is seeking to address is lending to SMEs. And that is what the German experience shows can be done in an existing commercial banking system. If there's co-opting perhaps between government and if there is forms of risk sharing between the banks. And also that overlaps into how companies organize themselves and access the finance. So there are big issues there which I think we need to look at, in addition to perhaps looking at setting up an investment bank of this type, because it's not just the investment bank that's doing the work in these countries. There's lots else going on to do with the underlying social capital.
Robin McAlpine, I'm guessing that one criticism you will face is people will say, well, look, £2 billion, I know it's over years. That could do an awful lot for the health service or an awful lot for schools. There's a danger. This is just £2 billion. We'll never see any return on it. Whereas we know if we build schools or roads or hospitals, we will.
Well, this isn't either or. And another really important thing to say here is this is £2 billion of capitalisation. This is the difference between a grant fund and a bank. That money comes back. That money, it only works. This bank only survives if it's getting a return.
Loans.
So this is basically a government loan to prop up the bank. And if I've got a criticism, I would have said that I think it's under ambitious. I think this bank, they should have said from the beginning, it's demand led. If Scotland has £3 billion worth of demand for good, solid loans next year. That's what we should be going. And
running out of
capitalising it
time,
would be easy.
but can I just ask you, is the idea it will be loans only? Is there any intention that this investment bank will take equity stakes in the companies it supports?
Well, this is something that whoever sets the bank up needs to look at. There's actually a very good case studies of places where banks sit on the boards of people they lend to because they see the partnerships as being 10-year, 15-year partnerships, not 3-year loan deals. And actually that can be a very positive part of a business environment. And that's one of the things I definitely agree with Ronald MacDonald on, is this is only one part of a number of things we need to do to change the investment environment in Scotland.
So if there's a would-be public sector Warren Buffett, they should start filling in the application
Well,
forms
there is, and they're called, the pension funds will put money in, and there should be plenty of people in Scotland capable of running a bank.
OK. Robin McAlpine, Ronald MacDonald, thank you both very much indeed.